And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow. Hello, everyone. Welcome to another Wealth Within update. I am Jim Beach of School for Startups Radio and joined, as always, by Dale Gillham of Wealth Within. Dale, how you doing this week? You are during the lock-in still? How's it going in Melbourne?
It just seems to be getting worse. More and more cases pretty much every day. I think we had the most deaths we had yesterday, and obviously the most cases. I mean, I got my my mask. I don't have it in front of the camera, otherwise it would look silly, but you got to go everywhere with your mask now. But it just makes sense. You know, Australia's got a zero or eradication policy, not live with it, live without it. And so far, most of the country, it's fine. You know, we're talking about Western Australia, Queensland, Tasmania, South Australia. It's just Victoria's the worst, and New South Wales, where Sydney is, they've got little pockets going, but other than that, we're doing okay. It's just a bit tough being in lockdown, as you know, and not being able to get out and have a coffee and read the paper or go for a walk without having a mask on. So, but we'll get through it.
Yes, well, you know, the American media makes it out like we're having problems, and if you look around the world, most of the countries of the world are having some sort of a second wave or an acceleration. So it does look like it's going to be with us for a long time, and it's not going to be an easy solution. Do the markets reflect that? We had another sideways week, more or less. What did you see, Dale?
Yeah, I mean, the Dow Jones was up early in the week. It was up quite nicely in the first couple of days, but the last 2 days, it just traded completely down to close lower, and it actually ended the week down just slightly, just down 0.76. The S&P was down 0.28 for the week. The NASDAQ was also down in a nice simultaneous dance with all three indexes down. It was only down 0.54%. Interesting, when you look at the Dow over the last 7 weeks, it's down 2.3% over the last 7 weeks. So the sideways move is really, really continuing. And a lot of people still think, you know, hey, the Dow's bullish or the US market's bullish, but it's down 2.3% in 7 weeks, which says momentum is slowing. And I know momentum is slowing for a lot of the tech stocks in the market, and they're the ones taking it a little bit lower. I know Microsoft, Apple, Google, Intel, they're all their momentums. When you look at their momentum, markets run on volatility and momentum, and that's what the big end of town look at all the time. How much volatility is there, and then how much momentum, and what's the direction of that momentum. And we're seeing all the tech stocks, all the major ones, all slowing. You know, Intel's was down 15.68%. Facebook was down 4.68%. Apple was down 3.8% last week, just to name a few. So it is that top end of that tech stock is slowing the market, and if they start to fall further, then as I said the other week, I think it would take the index with it, or the Dow and the S&P with that.
Well, on the other hand, if you have a bubble, one of the best things that you could do is slowly let some air out so it doesn't burst immediately. Is it conceivable that this is actually just a good thing, and a slow decline, 2-3 points, might eradicate the fear of a drop down to 15,000 again?
Yeah, I mean, markets generally don't crash at the top because everybody's still pretty euphoric in that bubble. And bubbles are generally driven by rampant speculation of people. But in the market right at the moment, we're seeing sections of that, not a broad market being in a bubble, which is really interesting. It was like the Bitcoin boom was a bubble, but it was just Bitcoin. It wasn't the broad market or the stock market itself. So right now we're seeing bubbles in certain areas, such as we've talked about several times, Tesla is in a bubble. There are other stocks within that bubble, and they generally tend to be tech stocks, not necessarily your Apples and your Microsofts, those sorts of companies, but there are some of those smaller ones, because retail investors tend to go for the smaller end of town or that mid-cap type of stock, because they think because they're more volatile, they can make money quicker. So they tend to get in bubbles a hell of a lot more. They also think they're cheaper too. They can buy at a really cheap price and ride it all the way up. And then they get into the chat forums and everybody talks it up and then it blows up. So we'll see a blow up of some stocks, but not the broader market, I'm thinking at the moment. If the market does start to fall reasonably over a period of time and price, then you'll start seeing the big moves coming in. If the market is going to go back down to that March low, you'll see the acceleration about halfway down. It'll just drop out of bed. But plenty of time for people to get out of the big stocks if that happens to be the case. But right now, I just think the market's slowing, momentum slowing in the market. We are tipping over. We will go into a low into the second half of 2020. How deep that low is, we just don't know at the moment.
Can we talk about earnings season? What have we seen so far and what do we expect in the week coming up?
Well, earnings season was has been a real bit of a mix this year in terms of companies reporting well. I think it's about 80% of companies or 70% of companies are reporting good earnings or not too bad. There's no big shocks there in earnings season, so it's not too bad. Obviously, last week we did have some big companies reporting in terms, we saw Coca-Cola as we expected to be the same as Pepsi, but roughly we're around about 25% away through earnings reporting so far. And again, it really hasn't been too many surprises. There's around about 70 to 80% of companies reporting positively. Now, basically, the figures so far look the same for the third quarter projection, but we did have Intel reporting earnings last week. Their second quarter earnings were $1.23 versus the expected $1.11, but guidance for their third quarter was down because they just can't get their next generation chips made at this point in time. So it is causing the stock to fall. But again, the brokers, we talked about those brokers last week. E-Trade reported last week, boomed during COVID-19 lockdowns, and retail traders recording a 267% increase in daily trading. And here's a big kicker. A record 329,000 new accounts for E-Trade in the first quarter, and it backed it up with 327,000 in the second quarter. But generally, in that same time frame last year, it was 34,000 in the month. So we're talking about 10 times the new accounts being opened 2 months in a row for E-Trade. And that's telling you the retail investors are getting in, trying to make some money out of the market. And when retail investors are out in force, not knowing what they're doing, we do get bubbles, and then we also get crashes on the other side of that. But there are rumours that Morgan Stanley are looking to acquire E-Trade sometime this year. Tesla, our favourite stock, it reported, interestingly, fourth quarter straight profits. It's never done that before. It's had a whole year of profits, which is interesting for Tesla. But it did beat analyst expectations. And as I said, Microsoft, it was $1.46 versus $1.34, so it was slightly up. But it doesn't believe everything's going to go well into the second half of this year. Amex, it was terrible last week. It reported just 29 cents. Revenues were down by 29% year on year as people they're spending a lot less on their Amex card, But this week, the ones
I've noted. Corporate travel.
Yeah, no corporate travel. I mean, obviously, a lot of corporates use the Amex card for all their travel expenditure. All that's because of the reporting and insurances and everything else is on that. So I don't think Amex is going to be very good. But we did talk last week about a lot of the financial sector not being fantastic in the year moving forward. This week, Adobe, Visa, Facebook, Apple, Amazon, Alphabet, Procter & Gamble all reporting. So it'd be interesting to see what Facebook and Apple and Amazon and Alphabet do, or Google, because as I said, their momentum is slowing. So it'd be interesting to see what they report this week. But steady as she goes at the moment.
Dale, if you will, let's change topics, please. And let's talk about some of the long-term effects of this, not 2 months from now, but 2, 3, 4 years from now. Interestingly, I saw 3 or 4 articles this week that working from home will not work forever in certain industries. And it was talking about how in program management, website design, which is what my wife does, that the teams are not as effective if they don't see each other with some regularity, that things that normally take place in an hour in an office are now taking 2 or 3 days to take place, and it slows down the projects, and people are missing deadlines left and right because of the situation. What do you think will be the long-term impact, and what are the downstream effects? If I'm not going to work every day, I don't need a car. This is unbelievable. I feel like I am the macro. My wife and I have already discussed selling our second car because it hasn't been turned on in 4 months.
Yep.
And I am the bellwether of all. So what do you think, Dale? Are we ever going back to work? Do I need to sell my second car and put it into Tesla stock?
Well, it may be correct, matey. It really is. But yeah, I thought you were the leader in the US. Everybody looked to Jim for their direction on what to do. So, but you are right. I mean, right now, all we're seeing on television is what's immediate. What do we need now? And all our immediate concerns and all our immediate needs. But in terms of being an entrepreneur and obviously looking for employment and where you're going to get your income from and how you're going to live your life, we need to be looking into the future, because there are roadblocks and opportunities. So we've got roadblocks coming up, but we've also got opportunities. And I don't know about you, but when I'm driving my car along the freeway, I'm not looking in the rear vision mirror. I'm actually looking at the window. And the rear vision mirror is small for a reason, is you don't need to look behind. We need to look in the distance. But using that as a metaphor, the car industry, with so many working from home, and as you said, they possibly also want to continue to work from home at least some degree when things get back to normal. Cars are not being used as much, and families are adopting or may adopt only one car. My wife and I, we've only had one car for probably 16 years because we've always had offices at home and we work and live together, so we only have one car. But can we afford two? Yeah, but why do we need two? It doesn't really cause any issues. You can go out and hire a car, you can get Ubers, those sorts of things to make up for the times when you do need two cars. But if we delve on that a little bit further, companies with fleet cars, you'd have companies out there with thousands of cars in their fleet. If people are working from home, they're not driving as much, so they'll be delaying turning over those vehicles, whether they, because they won't need it. And they'll also be asking questions, do we need this many cars if we've got so many people working from home? And then there's the flow-on effect. That'll affect the manufacturers of vehicles. They'll have motor car dealers, financing, fuel, maintenance. The list of areas there's the ongoing areas that'll affect is huge. And we're just talking about the motor vehicle industry, but then you've got conferencing and catering. How many businesses are having conferences right now? How many are getting catering into their offices for big meetings? They're not. And so there's a big flow-on effect through the catering and conferencing industry. Is that going to continue, or are we going to still use apps like Zoom to do our conferencing and catering? So really, I totally understand, there's a massive effect of how we're going to conduct business moving forward. And I think we said it way back in our first chat about COVID that there's a big paradigm shift happening at the moment. But from my business point of view, most of my staff have worked from home for a few years, so it hasn't been a big issue. But the issues of communication, not getting projects done on time, all of those things have come up for us multiple times. So I understand other companies trying to adapt it now, and you do really need to understand how you communicate with your staff in different ways, and not to mention mental health. That's a huge one, because remote working is here to stay. Right now we've endured 4 months of it. So, but in social distancing, isolation, lockdowns, other forms of restrictions, most people thought it was a real novelty to be able to work from home. It's great. I can work in my pajamas, because I hadn't ever experienced it before. But anybody in business knows what it's like to be on your own. But there really is two cases of that, or two sides to a story, the employees and the employers. How do we get that nice balance that the employees have work-life balance and are comfortable, happy and productive, but on the side of the business, or how do we actually look after our employees and get what we need out of them for what we're paying them? Yeah, that's a big question right now.
I was emailing with one of my publicist friends, and she mentioned that her husband is now working at home. He's an attorney, and that they fight over the good Zoom backdrop in their house, the good computer set up in the good place, and they now have a sign-up sheet for who's going to use the Zoom in the house as it becomes a 2-income professional stay-at-home house. My wife and I have the exact same thing. I have a beautiful office, really big skylights. And Dale, my wife's office is in a corner of our clothing closet attached to our bedroom upstairs. So, she's not going to need that second car, but we are going to need to add room to the house for a second office. And perhaps we'll see a lot of that. Dale, final words, then I want to tell you a good news story before we sign off. What are your final comments before I tell you my little good news clip of the day?
Look, right now, I think because of what the market's doing, it's in a sideways move. I think people just need to be patient. Don't get into that fear of missing out or FOMO. You really do need to sit back and watch for direction on the market. And I know some people will be thinking, well, there's stocks going up, I should be jumping into them. But what you don't want to be doing is buying sort of where the top is before it falls over. The market will fall into a low this year or before the end of this year. Don't know how far that is, as I said, but right now we're on that edge of the seesaw just before it tips over. So just be careful, buy really good stocks, make sure you set a stop loss, and don't be impatient. Make rational decisions and have some rules around that.
And what's going to happen this week? Sideways again?
Yeah, by the way it looks at the moment, it's more going to be tipping. Because momentum's slowing, it's more in the lines of it'll tip over. But I still think that sideways move will happen unless we get some sort of announcements or surprises coming up. But right now the market's not wanting to go up, so I'm tipping it's probably going to go down, but it'll probably just go sideways for another week or two.
All right. Well, here's my personal good news story of the week. My 22-year-old son graduated college. He did not go to a great school. He went to a B-level school, a state school, but he did A+ while he was there and got 7 job offers. Dale, wow. 7 job offers. He started his job. He selected a NASDAQ traded company and has moved to Raleigh to work for them and completed their training program. In his first month, his quota was 1 sale. And in his first day, he had 2. So, Dale, there's my good news story of the day. I'm just so proud I had to share it with you. I appreciate everyone listening.
Mate, I just think it's good genes, and I don't mean Levi's. So there you go.
I don't think so. No, very kind of you. Dale, have a great week. Let's look for the market and those stocks that are reporting. Again, this week we have Adobe, Visa, Facebook, Apple, Amazon, Alphabet, and Procter & Gamble, all of their earnings reports out. Dale, you stay safe there in Melbourne, and we will talk to you next week, my friend.
Got my mask, mate. I'll be fine. You take care too. Bye-bye.
And we will talk to you next week. Be safe, everyone. Thank you. Bye-bye.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Alrighty, as I was saying to Jim, I think the market is that turning point at the moment. Is it going to continue to rise up, or is it going to continue to go on that sideways move? Or are we going to start seeing the downward move? And I think the Dow is due for a low coming through, and it possibly will be September, could be October. If we peak a little bit earlier, it'll come in a little bit earlier. The low will come in earlier. If we peak a little bit later, it'll come in a little bit later. But let's go and have a look at the chart right now, and I can show you what I was talking about with Jim, how the market is moving sideways at this point in time. So you can see here, here's the bar of the week of the 5th of June, the week ending the 5th of June, which means it's from the Monday, the 1st of June. So that's the opening point there, 25,342. It closed at 27,110 points, and to last Friday's close, where you can see there at 26,469, it's down 2.36%. So we've had 1, 2, 3, 4, 5, 6, 7 weeks. It hasn't traded higher. Now the high here is on that week there, the week ending the 12th of June, and the high there is 27,580. Now obviously we're still below that one as well. So we've had a week closing up, a week closing down, a week closing up, a week closing down, a week closing up, a week closing up, week closing up, and a week closing down. It's almost 50% of weeks closing up as versus weeks closing down. So we've got an indecisive market at this point in time. And so we haven't, this is the high before the coronavirus here at 29,568. So the question is, will the market rise above that high, or will it start to fall away? So right now what I'm thinking is the market's probably, it's going to do one of few things. So we've moved up to the high. I was expecting that and was going to do something like that before coming down into some sort of low. Why didn't that do that? Let me put another. Let me do that again so you can see what I'm talking about. I should have clicked a different button. Moved up here, down, moved up, and then we go down, and there. I won't do it again. I should have clicked the other button again. So yeah, as I said, that's one rule, and obviously coming down into probably around about that 24,000 point mark. The other scenario is, if I use that, is the market's come down, it goes up to here, and then it comes down a little bit earlier. And now I've clicked the right button, I think. It comes down a little bit earlier into the second half of this year. So we'll see that if we start seeing a red bar this week. So if the coming week or the coming couple of weeks we're starting to see red bars, if it does go below the low of this bar here, which is 24,843, then that second scenario is a definite. It will actually go way down, and we can set some targets of how far it will actually fall. But at this point in time, unless we see green bars moving through here, moving through that high here of 27,580, then I suggest we're getting a folding over, which is what Jim and I were talking about. It's better to have it folding over because, as I was saying to Jim, we're getting bubbles in certain stocks, not necessarily the broad economy or the broad stock market. We are getting tech stocks slowing the momentum, and I did mention some of those, your Apples, your Microsoft, your Googles, those sorts of things. And those tech stocks in the S&P 500, they're like 25% of the S&P 500. So if they're pulling it down or they're dropping, that's going to pull or slow the S&P 500. Now, if we start seeing the S&P 500 slow, then there's going to be a little bit more, I won't say pessimism in the market, but there'll be a little bit more concern, and a few more people will start to sell, and then we'll slowly see it drift down. If we get some sort of mass news that's very negative, then we could see a little bit of a meltdown and the market drop, and that's why I'm a bit wary at the moment. So again, as I was saying to Jim, make sure you stick stop losses underneath everything and be ready to exit stocks. Hopefully it'll just be a nice gentle slow down through into September, possibly into October. But be prepared that once it starts to move down, there could be an acceleration of that towards the end, and there's always a possibility that March low will get broken. But at this point in time, it's not high, but it is possible. So, but right now, be careful. If you are buying, just be really, really careful. Just buy something that's really good fundamentally, and it is on a rise, and it's strongly rising, or it looks like it's going to be strongly rising. Don't try and catch falling knives because something's fallen away and buying on dips. Just don't do that. At this point in time, it's not smart to buy on dips. But let's get into the questions that we have for today, and I'll bring those up right now. Now, the first question we have today is from Michael, who says, "Hi, Dale. If you get a chance, I'd really like to know your thoughts on BAH and how they are tracking recently after a good rise in the past couple of years. Is it just a pause and a consolidation, or has the stock run out of steam? Many thanks." So let's go and bring up BAH onto your screen. You can see here on the left, it's had a beautiful move right up, a very, very steady stock to trade. I mean, this is the ones we like to look at. Very, very nice stock, moving up to a high here in January, dropped away with COVID into there, and it's just made a new all-time high back last month in June at 82.22. This month's looking a little bit more bearish. If we go over here, you can see here, that's like a double top through here, so it is a bearish signal. It does not look as strong. Even the current week is a little bit bearish. I'd suggest if it did fall away this week, so if we do get a trade below that $72 low and we do get more red bars through here, then that will be broken and it's on its way down. because if you're looking at, let's go back to that monthly chart, and you can see here how long this trend up has been. You're seeing from 2012, so 8 years of a trend. We don't have a lot of history prior to that, but 8 years is a long time for a stock to be rising. And it rose up from that low there, which was, let me put my pointer on it, you can see there a low of $11. So it's a spectacular rise, and you do get them consolidating. So it wouldn't surprise me if we do get, as I said, a down bar next week and we start to see it fall away, that you're going to see a lot of profit taking on this stock, especially in this market condition where everybody's still a little bit nervous. But again, if we do get the rise up, if it does start to rise up this week and we get a green bar, then we could see this broken and moving up nicely. But all I would be doing, mate, is just putting stop loss on the stock if I owned that. That's pretty much what I would be doing. Next, we have a question from Katya. Could you analyse Sedge or Solar Edge and BSTC, Biospecific Technology? So let's go and have a look at those two stocks and see what they're actually doing. Bring up Sedge here, looking at this one. It's gone quite vertical, isn't it? So let me bring up the monthly chart so we can have a good look at this. Again, another beautiful looking trending stock. If I go right back, you can see here from 2016 to $11, it's gone up to $180. So people that own that stock, nice trending stock, beautiful, makes some beautiful dips in through here. Did the March this year low. It's beautifully up, but it's more vertical, which again, I'm not going to say this is a bubble, but this is what I was saying to Jim, is a lot of stocks have gone more vertical. And what I mean by that is, you can see here, if I just use my little trend line tool and I go there's an angle of that trend from there. And if I go here, you can see roughly it was on there. But as soon as I go to here, look at the difference between the angles of that. So we're looking at a really strong angle here. What goes up fast will generally not last a long time, because if I bring that angle, you can see on that little bit it rose for 3 months. It rose a little bit on the angle for a month there. It probably rose pretty close, not too much there. But you can see a couple of months there. So it's now risen 3 months at this strong angle. So it wouldn't surprise me if we started to see this fall over a little bit and slow down its momentum, because what happens is people start buying at, let's say, $1.30 because it has dipped, and they're buying on the dip, and then they see it rise up to 170, 180. They've made 20-30%, then they start taking profits. And people did remember it was at 130, so they don't want to buy at $180. We're seeing a bit of indecision here with this bar last week. So it pushed up, couldn't get through, closed basically where it opened. So we opened at 171, closed at 171. And the week before it closed at 171, sorry. So if we do start seeing some red bars here, if we only see one or two, then it could turn and start to move back up again, but we might see it go sideways for a while too. So at this point in time, it looks all right. I wouldn't be exiting. I'd have an exit strategy on the stock, but I'd be hanging on to it at the moment if I own their stock. Let's look at the next one. This is the BSTC. Quite much more volatile stock. It looks whole different, doesn't it? We're getting this big move up into here, into July, big moves down, big move up, big move down, big move up here, and quite more volatile. So look at the length of these bars. It is a very much more volatile stock that we're actually seeing, but it just trending along this momentum. If I drew my little point here, you can see the momentum of this stock always goes up and around. Let me click here. It's going up and around this grey line. So at the moment, it's right up at this top end. So it wouldn't surprise me if it does start to fall away a little bit lower. If it doesn't hold support up around that sort of $51 to $54, $55 mark, I think it would go a lot lower. But right now, it's looking okay. It's only one bar down. If we start seeing more bars, if this low is broken, then we'll definitely go down to around that $50 mark. My suggestion is, and if it starts getting below 50, then you might find that March 2020 low, it will be in danger. But right now, if you do own it, hang tight. There's no sell signals for that on me at the moment. There's probably a couple that I would use here. If you haven't bought the stock at the moment, hang tight. Don't worry about it at the moment. Wait for it to give you some strength, because there's this is a really tough area for here between that sort of 67, 68 and that 72. It's a very strong resistance level. And I'm not suggesting if the next time that moves up to that, it might break it, but it's rejecting it at the moment. And so we need to see some strength on the market. And I don't think the market's got enough strength at the moment in what it's actually doing. There's a lot of nervousness on the market at the moment. We're seeing that in the charts that it's not pushing through. If the market was strongly trending at the moment, I would say, look, If it starts moving up, get onto it. But right now, just sit back and wait for it. But thank you for sending those questions in. I really do appreciate it. And also, thanks for watching till the end of this video. If you do have any questions for me that you'd like me to answer, just stick them below. Make sure they're US stocks. If you're an Australian, please don't put Australian stocks on here. I'm only doing US stocks and talking about questions about the US market on here. But if you put the question down, I'll get to answering them. Remember, also, I do these reports every single week. So hit the subscribe button now. Click the bell on the right of it so you know when we go live with our latest stock market reports. Hello. Goodbye. Sorry, I forgot to say that. For now, I'm Dale Gillham. Goodbye, good luck, and good trading.